Okay, so I'm very keen to get you set up with your trading stroke broker account as soon as possible. The reason for that is it's going to become an integral part of the course, and a lot of the learnings that you'll get from the various topics will include some tools and resources from your trading account. So that's going to be something we're going to get onto in due course. But before we do that, what I'm keen to do is just give you a bit of an understanding as to why your choice of broker is absolutely critical. Now, for those of you that have been trading a while, you've probably got your own broker. However, when it comes to trading the news, you need a specific type of broker to fully take advantage of the approach that I'm going to teach you on this course. So I'm going to go through that, and hopefully by the end of it, you'll be completely clear as to what type of broker you need to take full advantage of trading the news. So first and foremost, in the FX world or trading world, there are two common types of broker. You've got a market maker and a market provider, and this is the business model that a broker will run. So the first are market makers, and by their very name, they make the market by taking the opposite position to you. So if you take a buy trade on euro dollar, for example, they will take the opposite side. So whenever there's a transaction, there's two participants in that transaction. There's a buyer and there's a seller. So if you take one position, the market maker is essentially trading the opposite side of you. So they're making the market. So it's almost like an artificial market. However, with the second business model, it's the market provider model. And this is a broker where all they want to do is facilitate your trade into the real interbank market. So when you place a trade, they're not taking the opposite position to you. They're just providing you through to the interbank market, where another trader, an anonymous trader within the interbank market from one of the major banks, will take the opposite position to you. They're just a facilitator of your order. Their whole ethos is to give you a seamless experience where they give you the fastest execution possible. So those are the two types. Let's go through the model in a bit more detail. So the market maker model first. As we've mentioned, if you were to buy euro dollar at one standard lot or a pound a point, whatever it may be, the market maker, the broker, is physically on the other side to you. Now, because of this, they need a dealing desk in order to do those transactions. Therefore, they can intervene with certain trades. They can turn your trade down, they can slow the whole process down, and that can cause you a number of different headaches when it comes to your trading. When you make a profit on a trade, obviously they will lose on it. However, the flip side of that is if you lose on a trade, they will profit. So for me, it's a very unethical business model, and I can't get my head around it personally, that they actually benefit and they profit from their customers struggling and losing money. The market that you're trading is not the real market. You're not going into the interbank market and trading with the likes of the big banks. You're actually just trading a virtual market, which is you and your broker. And they're usually spread betting companies such as the likes of ETX in the UK. It's very unique to the UK, where they will have their own virtual market. In regards to the market provider model, which I'm much more of a fan of, it's a much more transparent business model, and the actual broker is aligning with you as a trader. They want you to succeed, so you're continuously trading. However, with the market maker model, you could argue that actually they want you to fail as a trader because they will profit financially. Now, I'm not going to get into a slanging match in terms of either way. I just want to give an independent and informal view of both sides so you can appreciate the two models and understand why we're going to go with a certain model over the other. So the market provider model, as we see here, you buy euro dollar at one standard lot or a pound a point, whatever it may be in terms of your trade size. What happens with the broker is they pass your order into the interbank market, and then someone in the interbank market, so it could be one of the big banks, one of the big hedge funds, or it could be just an independent trader in one of those in the interbank market, will take the opposite side to you completely anonymously. So you're competing with other traders rather than your broker. All the broker is doing is facilitating your transactions. And they're often called STPs, which is a straight through processor. So they're just passing your order straight through to the interbank market. And this goes through to the real market. So you're now actually trading within the real interbank market rather than an artificial market. It's a non-dealing desk because they don't need to take the opposite side of you. So they don't need a dealing desk. Therefore, there's no intervention, and the speed of execution is generally a lot faster than the market maker model. Now, there are pros and cons to both business models, so I'm going to go through that now, and then I'm going to suggest which one we want you guys to go with for the maximum opportunity for success when it comes to trading the news. So the pros of market makers. You have the ability in the UK and Ireland to make tax-free profits because you're trading through a spread betting company. Usually there's no commission, so your transaction costs are relatively low. They're generally easier to set up an account because they're underneath a spread betting company. It's underneath the Gambling Act, so they don't need as much paperwork to open an account, which is probably deemed a little bit dangerous. It's ideal. The market maker brokers are ideal for longer time frame trading. So if you're looking at the 4 hour, the daily, and holding positions for several days or maybe several weeks, where fast execution of your trade and low spreads are not essential to your strategy success. This is the critical element here. So if you are a longer time frame trader and you're holding positions for much longer, then the speed of execution and the transaction costs aren't that important to you and won't make or break your strategy's success. So that's the pros of a market maker. What about the cons? Well, for me, there's a massive conflict of interest because the broker is benefiting from their customers' unsuccessful trades. So when a customer is not doing very well, the broker is going to be benefiting. So it's a very unethical business model, in my own opinion, and there's a massive conflict of interest. Now, there's slow execution during volatile times due to the dealing desk. So the dealing desk, as we mentioned before, they can intervene with your trade. So they can slow them down, they can reject them, they can widen the spreads, they can do a number of different things where they can manipulate prices and orders and make your job as a trader much, much harder. I did initially use a spread better because I was drawn into the attraction of tax-free earnings. But when trading the news, my life was made so much harder because there was a manipulation of prices. I was actually trying to get into the market and my positions were getting rejected and I wasn't able to get the efficient entry that I needed to generate the profits that would make my strategy a success. The cons of a market maker also is generally they hold more risk because they are taking positions in the opposite side to you. If things go badly, such as when we saw recently when the Swiss National Bank removed the peg on the Euro Swiss at the 1.2 level, that caused a lot of spread betting brokers and market maker brokers to go out of business. Have a look at Alpari in the UK. They went out of business because they took on a lot of risk because they were physically taking positions in the opposite direction to their clients. So when things went horribly wrong, they held a lot of risk and they got into financial difficulties. Obviously, market providers won't have that issue because they're not taking positions. They are simply processing them through to the interbank market. And generally, the spreads are wider. The transaction costs are a little bit higher in regards to the spreads. That's because the broker can have a control over the spreads and widen them during the more volatile times. Okay, so the pros of market providers. These are the guys that are just passing your orders through to the interbank real market. So fast execution due to something called ECN, which is Electronic Communications Network. They're pushing your orders very fast through to the interbank market, keeping spreads very, very low as well, because the interbank market is competing for your order. So there's lots of competition, meaning that the transaction costs and the spreads are very, very low. Because they're just facilitating your order, there is no dealing desk. They're not trading in the opposite direction to you. There's no intervention, no manipulation. So the speed of execution is always very, very fast. There's also very tight spreads during the more liquid trading hours. So when the news is creating lots of volatility in the markets, which is essentially what we're going to go on and trade, you find that the spreads are very, very tight because more people are trading, and therefore the competition is greater and therefore the costs are brought right down. When the markets go very quiet and there's less people trading, you'll find that the spreads get larger. So that's a benefit of trading the more volatile times, is you get much smaller spreads or costs of doing business when we take a trade. It's ideal for intraday, news-based or automated trading where timing is of the essence and spreads need to be small. So that's essentially what we're going to be doing. We're going to be learning to trade the news where speed is of the essence. So we need to make sure that our trades are going into the market very, very quick so we can benefit from the greatest possible move. If they're getting held up or rejected, that's going to cause us a massive headache. And then finally, there's less company risk, because if we're putting capital with a company, we obviously want to be aware that they could potentially go out of business and there's a risk of losing our capital. So not only do we want to make sure that they're regulated so our money is protected, but also their business model has an element of risk as well. Market makers take on a lot of risk, and we've seen a few go out of business recently, whilst market providers are simply facilitating your trade into the interbank market, and the risk is held with the opposite trader, not the individual broker. There are some cons of market providers. Now, market providers are not underneath the Gambling Act and they're not spread bettors. So if you're a UK client, you will not have a market provider that offers spread betting. But as I say to a lot of the guys struggling with their trading and struggling with their market maker model, is there's no good having a spread betting account if you're not making any profits to have tax-free earnings. So I'm more than happy to pay commission and pay tax on my market provider model, because it means that I've got a greater chance of making profit. And making profit, if you're paying tax on your profits, well done. You're putting yourself in the top 20% of people that make money. Your broker is a key element as to whether you're going to be making profits at the end of the month or not, by making your life easier by being a market provider, or making it a lot harder by being a market maker. So we have slight disadvantages on that front, but if we're making profits, then really it's only a small headache to have. It's a slightly longer process to open an account as well, because it's seen as a professional trading account. So now it needs a little bit more of authentication, so things like proof of ID, proof of address. So it's a little bit longer to open your account, but it's fine. It's still normally within a few days you've got your account open. But I actually prefer that. I like the fact that a broker is going to a lot of time and effort to make sure I'm the person I am, and going through all the anti-money laundering processes that they need to do as a regulated entity. That's always comfort to myself when they're doing that. Okay, so when trading the news, which is what we're going to learn to do, we only want to use a market provider. We do not want to be using a market maker. And it's also a non-dealing desk model when trading the news as well, because we don't want anyone interfering with our trade. We just want them to be putting us through to the market. We want our broker to be aligned with us. And that means that they want us to succeed, because if we succeed, we're going to trade for longer and they will make a little bit of money on every single trade that we take for many, many years. If all of a sudden we're struggling and they're making our lives hard, we stop trading and they stop making money on all of our trades. So a market provider actually is desperate for us to succeed as a trader, because we will trade with them for longer. And we have a long-term successful relationship where both parties benefit. But key is when we come down to the actual strategy approach, which, as you'll find out in future topics, is it's all about speed of execution. It's waiting for a news announcement, and then if it does as we expect, getting into the market as soon as possible. We want that speed to be as fast as possible, and a market provider model will provide you with that. So we've given you a suggestion, because I know there's a lot of brokers out there, so you're probably getting a bit of a headache in terms of who is the one you should go with. Our suggestion, you don't have to go with them, but our suggestion is FX Pro. The main reason for that is that I use them, I've got money with them, and I'm more than happy. So I've got a very happy experience. I've also got colleagues and peers that have FX Pro accounts, so I'm more than happy to suggest FX Pro. They're a market provider model, which is exactly what we want, because it gives us that critical fast execution. The spreads are generally very, very low, especially on the more commonly traded currency pairs, keeping our transaction costs down and as small as possible. This is a really critical thing, is that they have exclusive and key trading tools that we are going to use throughout this course and are going to become an integral part of your day-to-day trading. So they have some very unique tools that we are going to use. They're also double regulated, so in the UK they're regulated by the FCA, and outside of the UK they're regulated by CISEC, which is a Cyprus regulatory body. So they are double regulated, meaning they have to go through and meet all the strict criteria that comes with being regulated, and that comes with obviously a certain amount of protection of your capital if the company gets into trouble. So that's our suggestion. So just to summarize, and in regards to FX Pro, don't worry, we've got all the instructions on how to open an account with them in the next couple of videos. So watch those videos, get yourself set up, and open that account, because it will be to your benefit, because you'll really start to maximize everything we're going to go through in the course. Okay, so just to summarize, your choice of broker is really important. It's absolutely critical, because it can have a huge effect on your profitability, especially when trading the news, because it comes down to speed of execution. Now, you don't have to use FX Pro, but as a minimum, you'll need to open a demo account so you can access their exclusive tools, which we're going to be using throughout this course, and what will become an integral part of your day-to-day trading. Now, as ever, do your own due diligence and make sure you're happy and comfortable with FX Pro. If Lehman Brothers can get into trouble, any company can get into trouble. So do your own due diligence. I have an account with FX Pro, so I'm happy to suggest them based on my own experience, but always do your own due diligence to make sure you're happy as well. And as we go along, I'm always monitoring my broker's performance, and I'd suggest you do the same. And don't be afraid or lazy to change if you're not happy. I know the account opening process can take a few days. It takes a while to get money out of a broker, but don't be afraid or lazy to change if you're not happy. And I'll continue to monitor the performance of FX Pro, and if I find that they aren't meeting the strict parameters that I set for a broker, and they start to make my life harder as a trader, then obviously I'll be updating you guys in terms of who I would suggest to replace them. But for now, FX Pro, I'm absolutely happy with them, delighted to be using them, and I'm sure you'll enjoy the experience of using them as well, and all the fantastic tools that they have to offer. So in the next video, you'll see that we've got a bit of a demo in terms of how to get set up with FX Pro. Also, you've got a PDF document which talks you through the 3 key steps that you need to go through in regards to getting yourself up. But I would recommend and suggest that you do this now in advance of going through the remainder of the course, because a lot of the course is going to include illustrations using FX Pro and the tools that they provide.